Hello, everyone. First and foremost, thank you guys so much for your constant love and support. I say, drop some likes, comments, subscribes, all that stuff. You guys comment on every video, and it's awesome. So, thank you guys so much. I don't always get to respond to every single comment, but it's I see them afterward, and when I do get a chance to respond. But yeah, man, overall, it's just amazing, and thank you guys so much for your support, genuinely, from the bottom of my heart. It really means a lot. So yeah, in today's video, we're going to talk about what the next steps are for the market. We're going to take a look at the SPY, the NASDAQ, the IWM, the dollar, the bonds, the VIX, and yeah, whatever else we need to look at. So without further ado, let's get started with the video. So number one, we've got news coming out tomorrow morning at 10 a.m. So obviously, once again, during 10 a.m., we should not be holding onto any positions intraday. So obviously, tomorrow morning when we're trading, day trading, just be very, very careful about holding anything during this time. All right. Now, very simply, let's start off by talking about the dollar, the VIX, and the bonds, the 30-year bonds. So the dollar, we know, has an inverse relationship to the market. So if the dollar is doing well, that means that the stock market, the overall markets, should be falling. So currently, we are continuing in this uptrend on the dollar. We had a bit of a red day to start the day, and then the dollar began to bounce very heavily towards the end of the day. This is it's tough to just directly say that something is bullish or bearish, but it depends on how we're going to get a close on the dollar. So if we get a close above 105 on the dollar, then that is going to be much more comfortable to be bullish. And so far, I mean, this already looks like a pretty bullish setup on the dollar. But it's all really predicated on whether we get a close above 105. You can see that we're right below 105 currently. We have about 3 hours left. So if this candle closes above 105, then tomorrow is almost definitely going to be another red day. But yeah, in my opinion, it's all going to based off of that. And we know that if the dollar has another green day tomorrow, then that means that the market should be falling. Okay. Next, let's take a look at the VIX, which is the VIX. We know that this has an inverse relationship to the market, the stock market as well. So if the VIX is doing well, we know that the stock market should be doing poorly, should be falling. Similar correlation to what the dollar is. So this is not an uptrend, obviously, but this is holding support at the 20 EMA. And it's wicking down below support, similar to what the dollar did, where the dollar was basically, it wicked below and then it closed green. The VIX isn't as clean in terms of the setup, but this is not falling lower just yet. And the MACD on the VIX is oversold. So if, since it's oversold, we could end up either holding support here at 20.3 and then bouncing off of this level, or if the dollar continues to show strength, then the VIX is going to show even more strength, and it might not even hold this level. It will probably just bounce straight away, meaning it won't stagnate around this level. It'll just bounce and gap up straight away. So that is what I think could end up happening on the VIX. It's going to be pretty interesting to see what the next steps are. But for now, let's go ahead and take a look at the bonds. And then after the bonds, we'll be able to look at everything in a more holistic view. And then we could take a look at the equities. All right, so let's go ahead and take a look at the 30-year bonds. All right, here's where the fun starts. The 30-year bonds don't look that great. And we know that the bonds have a more correlated relationship to the market. So if the bonds are showing strength, then the overall market should be showing strength. All right, that was a mouthful. Anyway, this is not a very strong setup. We're having trouble breaking above levels of resistance. We're having trouble breaking above 126, and things are just stagnating. So usually on a 1 minute chart, right, on a shorter term time frame, if this was like a day trade, this is a very bearish setup usually, right? Unless we get a close above 126 tomorrow, this generally continues falling lower. And if this continues falling lower, then the overall market should continue falling lower as well. We can see that the MACD is very, very overbought, right? The blue line is very, very overbought compared to the yellow line. That isn't generally an amazing sign, especially if the price of the bonds cannot follow through with the MACD momentum. So basically, if the bonds want to start moving upwards, right? If this yellow line wants to start moving upwards, obviously it acts slower than the blue line, right? The only way for that to happen is if this blue line just continues to shoot up. And as it continues to shoot up, then slowly the yellow line will begin to move up then as well. So for the blue line to continue moving up like this, it needs to start showing some green. So tomorrow, Thursday, Friday is going to be very, very important for the bonds. We need some solid closes above 126 currently. Immediately, this is not a super bullish setup, purely based off the fact that we can't get strong closes above levels of resistance. But yeah, so far, I mean, the bonds don't look great. The dollar does look more bullish, and the VIX also, I mean, the VIX is more 50-50. You can't really ascertain which direction the VIX is going to go. But yeah, there's that for the VIX, the bonds, and the dollar. Next, let's take a look at the overall equities market. All right, first off, let's just go quickly through all of the large tech stocks, and I'm going to give you guys my thought process. So Microsoft looks it looks devastatingly bearish. It doesn't look great at all. The MACD is oversold. This is a very, very bearish setup. It looks terrible. Google doesn't look as bad, but we had a wick to the upside. We could end up squeezing back a bit more, but the MACD also looks like it's about to cross above. So we could get a move up in Google, but it's not a guarantee. Amazon doesn't look that bad. Apple does not look that great. Similar to Google, we could get a bit of a squeeze upwards, and then we really need to see if Google and Apple can close above these levels of resistance. But so far, all this is showing us so far is there's not enough buyers to break above these levels of resistance. So because of that, it doesn't look like a really, really great setup. Tesla obviously also doesn't look spectacular, but Tesla, it could do anything. Honestly, it could be up 10, 15% in a day. It could be down 5% a day. Anything can happen. Tesla. And then here's Facebook. Facebook looks pretty good. But then when you go to Netflix does not look that great. So overall, things don't look that great on the large tech stocks and the large movers in the market. All right. So here's a chart of the SPY. You can clearly see that this also does not look like an amazing setup. I was saying how yesterday we needed a solid close above 404, 403 level to become very, very bullish, to become comfortably bullish. And now, since that didn't happen, I would be very, very, very surprised to see us like gap up and show strength now, because this, from what we're seeing right now, this is a very, very bearish setup. And honestly, like it just feels very, very heavy, and things can easily fall down to like 370 to 375 area. But generally, when things do look this bearish, so immediately for tomorrow, my thought process is we should be gapping down. We should absolutely be gapping down tomorrow. But then the buyers are going to step up at 392, 393 area to see basically if these levels can hold. And we could end up getting a wick below this level and then rip up higher. So that could be a pretty solid bear trap. But immediately right now, this is a very, very bearish setup. Things should be falling lower. I would be very shocked for them to bounce up, especially given the fact that everything else looks pretty bearish as well. But, you know, it all depends on if buyers can step in and hold this 395 level. If 395 can continue holding on the SPY, then we could just bounce off of that level. But the only bullish scenarios that I see is if 395 holds, or if we get an intraday wick below these prior lows here, and we like bounce off of 392, and then from 392, then the next day afterward we can start ripping up. Those are the only two bullish scenarios that I see. The third bullish scenario is if we end up just comfortably closing back above levels of resistance. All three of these are not really that high probability. The safest trade is to be short at the moment. Things look very, very weak. And yeah, I would be very, very shocked if we get a bounce up. So just taking a look at the overall market, we can see that the IWM did better. So the IWM, let's take a look at the chart here. So the IWM clearly did, relatively better than what the SPY looks, right? And even this is not an amazing setup. This still looks very, very terrible. Similar to Google and Apple's chart, we could get a bit of a bounce on the IWM. And then we basically just need to see if it could close above these levels of resistance. But then the NASDAQ doesn't look... So the NASDAQ also doesn't look that amazing. It also looks very similar to Google and Apple. So it's all going to be really dependent on if the NASDAQ and the IWM can lift the SPY up. Because currently the SPY looks very, very weak. And it doesn't look great at all. But yeah, so we took a look at the dollar, we took a look at the bonds, we took a look at the VIX. Things aren't screaming bullishness. So when things aren't screaming bullishness, it's safer to just lean to the short side and lean alongside momentum. And clearly, currently, the momentum is clearly bearish. This is not a bullish setup. And the only way that we would get some sort of like a gap up, even if we did get a gap up, the only way we would start becoming bullish is if we start getting major closes back up above like 400, 402, 403. So until then, we just have to short pops. But yeah, aside from that, I hope you guys enjoyed today's video. Make sure to like, comment, subscribe, do all that good stuff, and I'll see you guys tomorrow. Thank you.